Welcome to the Masse Appeal podcast. Our mission is to empower both aspiring and seasoned real estate investors with the knowledge and tools needed for success. Each episode, we engage with leading experts on health, wealth, and investment strategies. Now, let's meet your host, Renee Masse. With over 30 years as an entrepreneur and 10 as a realtor, Renee brings a wealth of experience in real estate investing, specializing in multifamily properties, student rentals, and land optimization strategies. Join him as he speaks with industry experts and shares practical tips to help you navigate the real estate landscape.
Adrian, thank you for taking the time to speak with us. This is very exciting.
Thanks for having me. Having me on the show.
Just to start off, so you're a realtor in Hamilton.
I am.
But your background is in police enforcement.
Law enforcement, yeah. I was a police officer.
So how did that transition occur? I mean, when did that occur and how did that unfold?
Yeah, I was on the job, the police job, almost 22 years
Wow.
in the GTA.
Okay.
And probably my last 10 years of my career, I started buying investment properties.
Yeah.
And I leveraged a home equity line of credit in order to do that. And yeah, so that was about the last 10 years of my career. And slowly but surely starting to build a portfolio while I was a police officer.
Yeah.
And I started to grow the portfolio by joint venturing.
Oh, cool. Right from the start.
I'm sorry?
Right from the start?
Yeah. Well, no. It was I probably bought my first 3 smaller acquisitions. I want to say they were duplex, triplex kind of space. And then from there, like 3 or 4, I didn't start joint venture partnerships until the banks cut me off. So
of course,
traditional
you're
A lenders.
Well, you're successful. The banks cut you off. That seems really strange.
Yeah. So I guess the debt ratios or whatnot had maxed my loan capacity with the traditional A banks.
Yep.
And I still wanted to continue in the space. So started to build up a little bit of a reputation within the multifamily space. And started to attract attention from different other investors to joint venture.
But at this time, you were still working.
I was still a police officer. Yeah.
Okay.
So yeah, I was definitely busy raising a young family. The wife, the child, the dog, the white picket fence.
Of course.
And going to looking for acquisitions that made sense, and still policing, night shift, day shift, court, overtime, and then taking care of my properties by myself and everything in between. So yeah, there was definitely a busy time there for sure. And all the while, the portfolio kept growing with the joint venture stuff. And ultimately, it got to a point where I had to make a decision. I couldn't do both anymore because.
Do you remember that point very well? It was like there was a moment, a time of day where you said, "What am I like?" You're getting up to go to work, and then you're kind of shifted between both. Like, how did it occur?
Yeah, the light bulb went off, and obviously, I was burning the candle at both ends. I was exhausted.
Yeah.
And my wife said to me, based on where the market was back then, cash flow, so on and so forth, the amount of cash flow and properties we had,
it
was like, basically you're running around half asleep. It's not obviously safe to be half asleep when you're a police officer,
of course,
for obvious reasons. Yes. But she's like, we don't need the police income anymore. We can survive without it based on what we have going in the real estate space. And we figured out some finances and whatnot, and projections on what we really needed to survive and the cash flow.
So it was more of a rational decision than was it an emotional decision?
It was more rational.
No need.
And it was hard for me because all I ever wanted to do growing up was be a police officer.
No.
It was like ever since I was,
It's a childhood dream, really.
Yeah, like just a real small young guy. It's like I always wanted to be a policeman. So it was very emotional for me to leave that. And I left, on a good note. I wasn't in trouble or, got reprimanded or disciplined or had to resign. I left on a really good note.
Good.
Yeah, so it was emotional in that regard, but I wanted more.
After how many years did you leave?
22.
22 years. That's quite a career, yes.
Yeah, so I wanted more. And real estate was my I guess my tool to get me more to life. And I wanted more to life. I wanted financial freedom. I wanted time freedom.
Yes.
Geographical freedom. All the things that, as much as I loved being a police officer, I could never have all those checkboxed off with, let's call it the 9 to 5 on a salary. And
what did you imagine it would look like when you did quit? Because a lot of people they transition and then they've got a lot of free time on their hands. They either do very, very well, they're like doing tons of flips and a lot more deals, or some just kind of, it's a struggle because you had a routine, you had friends who at work, now you're no longer living the same lifestyle.
Right. So it gave me the freedom. I actually probably work more hours now than I did when I was a cop, but it's different kind of work, right? It's a different kind of work.
Yeah.
It's working, and the fruits of your labor are only really benefiting you and your family. And you basically make your schedule, even though I like to be busy, I like to work. But I make my own schedule. Like I don't have to worry that, roll calls at 6 a.m. and I can't get there at 6:05 or I'm in big trouble. And you know what, if I want to take this weekend off, I have to ask my boss if I can have the weekend off because we were on day shift and there's a protocol to get time off. Now, if I want time off and I want to travel, I can take any day of the year off. Nobody tells me what to do. So it gave me that freedom. Obviously,
Well, what do you miss now that you're no longer being in the law enforcement?
I miss the guys.
Yeah.
I miss the guys. I miss the
camaraderie, the
brotherhood of the police. There's probably no other job like it that there's that kind of brotherhood.
That bond.
Yeah. Maybe the fire department, emergency services and whatnot, somewhat similar, I guess. But yeah, I miss the guys. I miss the brotherhood. I don't miss the shift work. I don't miss the court. I don't miss the consistent public scrutiny.
Yeah.
And just the job really changed a lot over 22 years and not for the better, but it's just going with the times. But it gave me a lot. Like I learned a lot from police. I learned how to negotiate. I learned
that's very important.
I learned how to talk to people. I learned how to listen to people. All things that really advanced me, I think, when I transitioned into real estate. And then ultimately, obviously, as I mentioned, I became a licensed realtor as well.
Yeah.
And all those
right away, or at what point did you
it was probably a couple of years after I retired, I got my real estate license. And the mindset was, obviously we were still buying properties. We're still joint venturing. So it was kind of like, well, why do I need to always lean on someone else to take me to go preview this property or this or that? I'm in this space actively pretty much every day. It would make most sense for me just to have my license to transact on my own and obviously make some money while I'm at it with commissions, right? So that's how that happened. So it's probably a couple of years after I retired from police that I got my real estate license and then started to transact. And since then, I've That was probably 6 years ago now.
Okay.
I've only been a licensed realtor for 6 years, and it's gone well. We've been busy. Now, obviously, I'm transacting, helping other investors.
Of course.
Hey, Adrian, find me this. Adrian, find me that. Or Adrian, let's joint venture on this project. Can you find us something? So
Okay.
I've used the license.
I got another question. So what did you learn as a real estate investor that you didn't learn as a police officer?
Well, obviously, what's a good investment,
Oh, okay,
right?
sure. Of course.
What's a good investment is
Yeah.
what I learned as a real estate investor.
So yeah, this is a good subject. So how do you analyze and how do you know, like you've seen so many properties. So, a real savvy investor can walk into a place and within 5-10 minutes, they go, yeah, this has got potential here. So
Right.
how do you analyze your deals?
A lot of years of experience.
Yep.
I've been running deals now and analyzing numbers, for 10 plus years. And as you know, it's in real estate, it's all about the numbers when you're talking investments and whatnot. So just experience,
Yeah.
sitting down with the right people and being shown myself, and then just repeating that process and looking and analyzing. Because it's, as you know, I mean, if you get the numbers wrong, the investment would look like it could be a great investment and ends up being not so great.
Yeah, and that can hurt. And there's always that transitional period, but you want to make sure you want to be confident with the numbers and also the potential numbers as well. That's very key.
Absolutely. No,
Yeah.
absolutely. But yeah, it's been about 10 years now. I've been running numbers and looking at different deals. So overall, yeah, it's second nature to me now.
What don't you touch? What do you see and you go, listen, this is not for us. We move on it. And I
We
imagine
don't
you
touch the small stuff anymore. Ever
Yep.
since interest rates, started to climb. The smaller, investments don't make a lot of sense with the numbers.
like a single family
But now we're
dwelling or a
really-
duplex or a triplex, something less than
Yeah.
six
Exactly.
units. Yeah.
So now we're
Why
really
is that? Why, for those who may not know, why is that? Just so that they understand.
Why is what? Sorry.
Why is it was eventually what the small stuff makes no sense. Like explain that to people who may have that question.
Sure. So residential lending, residential mortgages, obviously we all know it's been all over the media the last few years. Interest rates went from, let's say, 3%
Yep.
to almost 7% at their peak. So obviously that difference in mortgage payments in, let's say, a triplex, when mortgage payments almost doubled, but rents haven't doubled. Obviously, that affects your cash flow. That affects, the numbers. That affects your bank account for obvious reasons. Similar to if you have it's the same kind of mortgage you have on your principal residence. Same thing.
It's more volatile. It's more volatile and less certainty in it because obviously you have less units as well, rather than having like a 16-plex. One unit goes empty, not a big deal. You got a duplex,
Right.
one goes empty, that could throw off the whole investment right there.
Exactly. Yes. So, yeah, that's a good point. And variable mortgages were affected the most, as you already know, right? Because that's where obviously we took the biggest hit. And a lot of investors, and I'm part of that group. When rates kept going up, they kind of never thought they'd go where they went and never locked in on a fixed product. When rates first started to go up, if we all saw the writing on the wall and locked in on a fixed,
that would have been nice.
It'd look a lot different than what it looks like today. So, yeah. So let's talk commercial lending.
Yes.
Commercial lending, believe it or not, and a lot of people are intimidated by that, but let's talk a small apartment building, 10 units, commercial lending. those units or that mortgage right now, you're probably sitting at a 4% interest rate with CMHC.
Mhm. Yeah.
So
Sounds
interest
appealing.
rates with commercial lending, commercial lending, the interest rates are cheaper. People would be like, so you could get a cheaper mortgage for an apartment building than my principal residence, 100%. CMHC incentives, as you may or may not know, if you qualify for some CMHC incentives, you could get up to a 45 or 50-year amortization.
Yeah, that's cool. And 90% loan to value or
And
95.
90% loan to value, which makes a complete difference when you're looking at cash flow. A 50-year AM with a 90% LTV is going to cash flow much better than an 80% loan to value and a 30-year AM. So cash flow on the bigger stuff, and I say bigger, it could be a small 8-unit, 10-unit. It's really not that difficult. It's like, if you're comfortable in the triplex space, the natural progression is to go, I think, to a small apartment building. And really there's no difference. It's like taking the training wheels off of a bike and you're still good. The principles
You're
are the
just adding
same.
another zero to it at the end.
The lending's easier.
Yeah.
The lending's cheaper. The incentives are better. There's so many pluses in it, which is why we transitioned from the smaller stuff, the triplexes, to the smaller apartment buildings. Let's say from, the smallest one we have is, I think, a 6-unit. The biggest one we have is 46 units.
Nice.
And this all, like I said, this all started with, 14 years ago with me pulling a home equity line of credit. Cool. And leveraging my house to now, owning, a substantial portfolio within the GTA.
That's really cool. That's awesome. So how is it now that you've scaled the business at such a level? How did you go about scaling it from like 14 doors to 400 doors?
Yeah, good question. We get a lot of business from referrals.
Yep.
When you do a good job and you bring a good product and you bring a ton of experience to the table, people tell other investors, people tell their family, people tell their friends, colleagues, work colleagues, hey, and a lot of people would be like, we get calls, all the time saying, hey, I know you just completed a project with, my cousin Tony, and you know what? He was very happy, and he got what he signed up for, and I'd like to do something for you guys too. Yeah, so it's just doing a good job, providing a good level of service. Same time, investors need to understand, though, too, as you already know, we don't control the market, right? If things do change, interest rates go up, rents fall, so on and so forth. Those are items that I cannot control. So again, there's risk in everything.
Of course, every investment has risks, but typically these are 5 to 10-year investments.
At least, yeah.
This is what you tell people. It's a question often. I find it's a question of managing expectations in a way.
Yes, yeah. We look for a minimum of a 5-10 year hold, and again, if the property is cash flowing, it's carrying itself.
Yep.
It's running well.
Why sell?
You don't need to sell. Let it ride. We all know the longer you leave your money in real estate, historically, the better, the more, when you're going to cash in 20 years down the road, potentially, yeah, that's where the big money comes from. Like these people that are doing flips to make, 40 or 50,000, there's nothing wrong with that, but we're more of a long-term hold company that, believes in the power of long-term generational wealth.
Nice.
As opposed to, let's make a quick 40 grand. Again, nothing wrong with that. I want
Yeah,
to cash in
they both
and
have their niche,
the
and
advantages.
depending on
Yeah.
the individual's needs. But yeah, I definitely agree. We've done some flips, we've done some long-term hold. It all depends on each one's strategy. Yeah.
Are you ready to supercharge your real estate investments? You're in the right place. Many listeners of the Mass Appeal podcast might not know this, but Rene Masse is a licensed realtor with Rockstar Real Estate and a key player on the Buy-in Kingston team. With decades of experience and a diverse portfolio of satisfied clients, the Buy-in Kingston team is dedicated to helping investors like you succeed. They provide a comprehensive, full-service suite of solutions tailored for investors, designed to maximize your cash flow and enhance your return on investment. Ready to unlock your next cash flow opportunity? Book a discovery call at buyinkingston.com today, and let's start building your real estate empire together.
Yeah. So as long as an investor goes in with the right mindset, knows what the exit strategy is going to be, is good with that, and on top of it, has a clear mind that, hey, there's risk in everything.
Yep.
We do whatever we can to mitigate that risk. But again, ultimately, if rates change, rents decrease, all those items that happen in the world that I cannot control can't come back to me and say, well, you said the property was going to be worth this much at this time. Yeah, we run our analysis on different, I guess, comparables and whatever, and based on the market, what's going on there. We try to be very conservative, but at the same time, if interest rates go to 10%, 2 years from now, obviously our numbers today aren't going to be legitimate. And again, I don't have control over that. Nobody.
And we don't have a crystal ball. It's hard to predict what's going to be the future, but you want to be conservative with it. And overall, I imagine that your investors are making better returns in real estate than with the stock market or mutual funds.
Yeah, that's 100%.
I think that bottom line, I think that's where it comes. That's
Right.
that's one thing to retain, I find, with most investors. Here's another question. So you're talking about the mindset. What is the mindset of a real estate investor that you find? I mean, you went from a police officer to a real estate investor. What mindset did switch around?
I've always had a very high work standard ethic mindset. I've always had a mindset of taking chances. I've always had a mindset of not being afraid to fail.
Good one.
In
That's
what?
a big one.
Oh, that's a big one.
It
Yeah.
is a big one. Yeah,
I mean, at the end of the day, if you're too scared to do anything and oh my God, and you always think worst case scenario,
Yep.
And you know what they say, and there's so many things on social media about this with all these mindset guys that do their videos, but everybody says you grow and you learn when you fail at something.
Oh,
You don't learn anything by winning.
You learn a pretty few things, but not as much as when you fail.
Right. Yeah. Yeah. You learn when you fail because you made those mistakes and it's like, oh, yeah.
Well, they're lessons. They're lessons.
They're lessons in
making
life.
money or you're learning. That's the way I see it.
Yeah. You can't always win. And if you never step outside your comfort zone, if you never step outside your comfort zone to do something you haven't done before, because you're always scared you're going to fail, you're not going to, yeah, exactly.
Yeah,
I mean, you got to do as much research as you can, line yourself up with the right people, the right professionals in your corner to try and help with that success.
Yep.
And then take the step, take the leap and do it. And then, you've done everything you possibly can to prepare your success, but sometimes it doesn't go that way. You have to be able to accept that, say, okay, all right. I mean, hopefully it's not catastrophic, but it's like, okay, all right, I learned. And let's face it, I've been in the game 14 years. It's not all been roses.
No, it never is.
It's not all been roses.
Do you want to share some challenging obstacles or things that failures? Because there a lot of people think that I got this one call a couple years ago where the guy called me up and he said he wanted to learn everything about me, so he can avoid mistakes. And I said, well, you're never going to succeed. There's no growth if there's no way of having success without a couple lessons and failures along the way. So,
Yeah.
so are you willing to share some,
Yeah, nothing major, but I've lost a lot of money when we were renovating a lot of our properties. So when I first started, we have our own construction company now.
cool.
But when I first started, I was just hiring, your typical general contractor,
Yeah.
this, that, the other, whether it was referral, whether I searched them out on the internet, whatever it was. And ultimately, in those scenarios, there's several times, probably 3 or 4 times, I got taken to the cleaners because those guys were not what they said they were.
Yeah.
They would start the job, not finish unless you gave them more money. Then you give them more money, then they take longer, and then they want more money. And you get to a crossroads where you just got to fire them. And now you got to bring somebody else in to clean up this mess. They're going to charge you an arm and a leg because nobody wants to go in
that
and
adds
clean
the
up that guy's
project.
mess. So yeah, I've probably lost, I don't know, over 14 years before we started our own construction company. I probably lost 70 to 100,000 in that kind of bullshit. But I learned from it, and I learned how now to protect ourselves. And it pushed me to start our own company with our own people, that I don't have to worry about these fly-by-night characters, coming into my life ever again. Now we
also brought
company.
Maintenance and repairs back in-house because it just makes sense. As
Yeah.
you grow, there's tons of repairs. Like, it's a constant without there's always repairs to be done on these places and renovations.
Yeah, 100%. So yeah, we did that as well. So overall, I learned a lot. I made mistakes. I lost money. Never lost a ton of money, but I've lost some money. I've made mistakes. And honestly, they advanced me to the point where now I can sit in front of anybody and exchange, there's probably not one scenario there's probably close to one scenario that I have not experienced in real estate multifamily investing, mostly because I've made those mistakes, but even more importantly, I've been through the trenches. So before we started our group of companies, I was the guy taking care of it all.
You were dealing with the tenants as well, you're saying?
Tenants, the toilets,
Oh,
showing the units, prospecting new tenants, doing background checks on tenants, filling out lease agreements,
cash for keys.
Cash for everything. I did it all myself. And then obviously we got to a point where I couldn't keep up anymore. And then the light bulb went off again and saying, okay, so why don't we make this a full-time business and really cater to our own portfolio and our joint venture partners portfolio to provide that service to them, and that peace of mind that, hey, if I joint venture with Adrian and his companies, I get his services in his companies that only service our portfolio, and there's no middleman. There's no, okay, Tony, let me call the guy I found, on Kijiji and see when he's coming back to finish. It's us and our group of companies. So that's reassurance. I think it adds reassurance to the investors as well. That
so what kind of investors do you work with? Those who are looking to jump into real estate investing, like what are the 5 criteria that you like to work with these people?
Yeah, good question. People that obviously want to get into the multifamily space, whether it's a 4-plex or a 50-unit building. We don't do condos. We don't invest in single family homes. It's the multifamily space. People who want to be hands off to a certain extent. They may want to learn some things along the way, but overall, they want to be hands off to the point where it's not, they're going to say, well, Adrian, on our renovation of that unit, my cousin's cousin's friend, we could save $50 if he comes in and he does the plumbing. And, Adrian, if can we save another $100 because, I'll answer the phone at night if the tenants call at 3:00 in the morning that, a pipe burst. People who want to be hands off, they want to learn, and they want to learn from the experts
Yeah.
who do this at a very high level and are very successful.
Or do a few actually then move on to their own
Move
project?
on, yeah. Do them on your own, absolutely.
Cool.
You know, we also work with some very high net worth individuals who don't want to know, all they want to know is what's the return on my money. I don't want to know. I've worked with investors, very high net worth investors. They've never seen the building we own together. They've never been there. They've never stepped foot in this apartment building over the last 6 years. But what they do know is what they're getting in their bank account, you know, at the end of every month. So it really depends. But yeah, typically the investors realize that we're bringing the expertise and the knowledge, and that's what they want, to work with, you know, a professional company like ours, 14 plus years experience, in-house property management, in-house construction.
That makes a huge difference. Huge difference, because you can actually you can pass on the savings to your investors. Yeah.
Ultimately, you know, and there's value to all that, and they appreciate the value, and they continue on with their own careers. They continue to bring their kids to swimming and hockey and ballet and all that stuff, while we handle everything.
Yeah.
Everything.
And it's a full-time gig. I mean, there's those who do their own management. It's got to be challenging. I mean, you get calls on Friday nights, Saturday morning. It seems to be the typical constant calls around that time. Friday nights and Saturday morning, I find most people call.
Never fails, right?
Yeah,
never fails.
It's always goes on a 3-day weekend or something like that. So yeah,
never fails.
Yeah.
But that's what I want to provide them. I don't want nothing to change in their life.
Yeah,
I still want them to be able to go to the sports and spend time with their family and advance in their own careers, whether they're teachers, policemen, lawyers, dentists, doctors, doesn't matter. Focus on your career. Focus on your family. I don't want this investment property to take you away from all the things you got going on in your life, because it shouldn't. We're the professional company. We have the staff and the team to deal with everything. So nothing changes in your life.
Yeah, because it's not worth investing in real estate and having the mental anguish associated with it. I know people who bought a duplex, and they're getting the calls from the tenants. They're bickering together. It's just not worth it. It's not worth the money. Not worth the money.
No.
So Adrian, this is really good. I think you got a lot of knowledge here, and that you're well set up. What do you see the future like next year? What do you see 2025 coming around? What do you expect to see in the market, in the real estate market?
I think we're going to have a really strong spring market.
When is the spring market? Because spring market's been like February, March usually. It's like it's
Yeah,
early.
I know. Let's call it. I'm banking more on March into April. I think we'll have at least 2 more rate cuts by then. I think prices are going to start to creep up by, let's call it March 2025. I think we're going to see a significant, and I really pray we do, but I think we're going to see hopefully a significant change in energy and people coming out that have been in the closet for the last 2.5+ years because of rates. I mean, if we can get rates,
so buyers will come out. There'll be more buyers, you're saying?
Yeah. I really believe that. Again, no crystal ball, but that's my belief. What
about the negative news? I mean, it seems as if we hear a lot more negative news than the positive stuff. Like there'll be less immigrants coming in. That will make a difference, because that's been holding up the Canadian economy. Now, next thing you know, you've got tariffs, 25% tariffs. It seems like negative news. It seems as if our economy is on a support level where we're hinging on the level. So how does that work out for next year?
That's a really good question, and I really should. I have never been a real political analyzer in what that can do for our real estate and economy, and I think I should beef up on my knowledge on that.
Or Adrian, how do you minimize that risk? Because there's many ways of going about it. Because the news is always negative. People are going to hear it, listen to it
all the time. Yeah.
So there's ways of minimizing it so that way, you're sleeping well, knowing that in 10 years.
You really got to do your homework. And I think if you line your you know what they say, your net worth is your network.
Yeah.
Surround yourself with knowledgeable people in the space, people who are in the know, maybe become part of some real estate investment communities where, they meet once a month or something like that. And the experts are talking analytical stuff,
Hmm.
so on and so forth. But, networking and keeping in touch with the times and what's happening out there by joining maybe a couple of networking groups, a lot of knowledge can come from that. A lot of
Huge,
knowledge can come from
huge.
that because there's some real experts in the field. We're experts in executing, but I can't say I'm an expert. I'm an expert in data analysis and projecting, what this is going to be like, by June or July.
So as of now, like what would be your superpower? Like you've gone very well over the past 14 years. What's your superpower having reached this level?
My superpower. Well, I think my personality. I'm very trustworthy. People want to do business with people who they know, like, and trust,
Hmm.
right? Let's
Yes.
face it. Especially if they're writing big checks, right? They're writing big checks to invest and buy investment properties. So they're going to do business who they know, like, and trust. And I think my track record, my personality, my reputation speaks volumes. People trust me. People like working with me and our group of companies, and having everything under one roof. Really, when I'm sitting down in front of investors and I say, yes, we have our acquisition team, we have our construction team, we have our property management team,
Hmm.
all under this roof, this one building. Everything, it's a one-stop shop. Their eyes light up. It's like, oh, that's really good. So I just deal with you and your personal team, right, Adrian? Absolutely. There is no, third party, second party, so to speak. It's just me and my team. So, and I try to, for our partners, I try to be the one communicating with them as much as I can, because let's face it, they they like to talk to me and get answers from me and the reassurance from me that, we're on track or we're
Of course.
this or that. So overall, that whole full circle operation we have going on really puts a lot of investors' minds at ease.
Cool. And where do you see it going in 5, 10 years?
We want to start getting into development. So I want to
Nice.
start building these things. And you don't, with CMHC development programs that they have on, you really don't need that much money. People think, okay, so I'm going to build a 30-unit apartment building. I need like 10 million cash.
Yeah.
No, you don't. You don't really need much more than what you need because CMHC will lend 95% loan to cost of
That's
your property.
amazing. And
It's crazy.
they're encouraging it right now. CMHC is encouraging to build like the housing crisis. We can
Yeah,
benefit from it. Definitely.
yeah.
I recently met, it was two church ladies. They had built a 16-story building right by the church. And they just all the money came from the pastures in the at the church. Unbelievable.
Wow,
Yeah.
that's
So
amazing.
yeah.
But
So
yeah, no, I won't. Sorry, go ahead.
where any other things you'd like to mention and like to add
No,
on to
I think we
this?
covered a lot. Again, I can't stress enough, commercial lending, its incentives are so much more attractive than your typical residential Royal Bank mortgage. The incentives are crazy. And like I said, you don't need a lot of money to get in the game, with CMHC incentives that you can only get on a commercial platform.
Mhm.
You can't get those incentives to buy a condo. They just
What
don't come.
whereabout is it? Do you have a specific location that only one market that you invest in, or is it multiple?
No, it's multiple. I'd say will be anywhere from Burlington, Ontario, Hamilton,
Yep.
Welland, Niagara. So most West End GTA as
Mhm.
opposed to, downtown Toronto or east of Toronto. It's more West End of the city.
Cool. Yeah. So Adrian, where can people find you? Those who may want to invest with you, where can they find you?
Yeah, so we're all over social media, LinkedIn, Instagram, Facebook.
Under your name or your company name?
We're under Generational Wealth Creators.
Cool.
So if you can even put my name, it'll come up, or you can just type in Generational Wealth Creators, and that'll come up as well. And then we're all over. We're all over the platform. So no
Cool.
trouble finding us. Shoot us a message. Free advice if you just want to pick my brain about, something. I'm not going to spend 2 hours on the phone with you, but if it's a quick chat, no, I don't mind giving you some answers to maybe some scenarios or questions you may have. I like to give back and help fellow real estate investors, with whatever I can based on my 14 years experience.
Cool. Well done. Well done. Good talking with you, Adrian. And we'll definitely have to connect again.
Absolutely.
All right.
Thank you. Thank you again for having me.
You're welcome. Bye. Thanks for tuning in to the Mass Appeal podcast. Hope you found today's episode insightful. If you enjoyed the show, please subscribe and leave a review. Your feedback will help us reach more inspiring investors. And remember, every step you take towards any goals brings you closer to better health, greater wealth, and a more fulfilled life. So I encourage you to take action and apply the insights you've gained today. Until next time, I'm Renee Masse, encouraging you to stay curious, keep grinding, and invest wisely. See you in the next episode.